probably the peak was like, when Bitcoin was near its high, it was probably a little higher than it is now because it was just, large.
Mm.
Now that it's shrunk, it's gone down somewhat, and I expect in the years ahead it'll probably go up a lot. Even if I'm not, say, plowing a ton more into it, because I already have a very large position, I am still dollar cost averaging,
Mm.
but I've generally established the position that I'm happy with, and now my goal is just to kind of let it ride as long as I view the network as the fundamentals keep improving, and I don't see anything in sight that would really change my thesis in that regard.
Lyn Alden is a finance and engineering professional who specializes in investment strategy. Her area of focus is on value investing, which is supplemented by a global macro perspective. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content. According to Lyn, Bitcoin can be considered a highly liquid substitute for money rather than actual money itself. The whales are sending crypto assets both to and from exchanges, where they could potentially be sold on the open market. Taking a multi-year perspective and considering the network's fundamentals are important factors for investors, says the macro expert. Professional traders are going to try to get what they can out of it, but I think for the vast majority of people, I would just point to that it's by most metrics, it's kind of a deep value zone based on a lot of different metrics. I think it is attractive in a 3 to 5 year perspective. However, Alden says there is a possibility Bitcoin may dip in value later this year if federal monetary policies dry up liquidity.
I personally find equity investing, really useful. That can be either individual stocks or if I had less time, would be ETFs. But then I would want, hard money as a notable part of that portfolio, which in my view today does include Bitcoin. And so I think it really depends on what someone's trying to optimize for. I think you can make a case where it's almost like a barbell approach, and that's kind of the way I'm approaching it, which is I focus on investments that provide pretty good income and an income that grows with inflation on one hand, and then I also have like a slice for like say Bitcoin, some gold, things like that that are kind of these bare asset alternative monies that have
Mm-hmm.
a much slower supply growth rate on average than you're getting with fiat currencies. And the Bitcoin, yeah, the added kicker that is also, arguably, if the thesis is correct, it's arguably under owned. It's still in its adoption phase.
Mm-hmm.
And so in addition to being, like a finite asset, it's also basically still underappreciated, uh, uh, understood, and it's kind of growing into whatever total addressable market that it's eventually going to reach. So if we have a certain percentage of our savings that we don't plan on touching for years and we want to have that optionality, then I think that Bitcoin is a good argument for that. And then there's a very large market for where that can be useful.
Mm-hmm.
And basically the advantage there. So first of all, the downside of a very large company getting into Bitcoin is career risk, right? So the people making the decisions, the CEOs, the CFOs, they're usually not the majority owners. They usually are like basically hired by the board, representing the shareholders, depending on how big of a company we're talking about. And so they're focused on reporting good quarterly results, good yearly results,
Mm-hmm.
maybe at most like rolling 2, 3 year periods. They want their options to do well. They want to not lose their job. And so it's really about, it's not really about taking what they would view as risky decisions. I mean, most of them haven't spent 500 hours studying Bitcoin, and
Mm-hmm.
so they said, well, I'm not going to put part of the balance sheet in this like speculation from their view.
Mm-hmm.
And another thing is that even if they have done a lot of work and they say have Bitcoin on their own, like in their personal savings, there's usually a problematic accounting treatment. Now, I think this is starting to get resolved, and over time, I think this will get better. But a lot of accounting, the way it works is like if it loses value, you have to like book that as a loss. But if it appreciates in value, you can't. And so if you're a small business and you're only reporting to yourself or a few others, and you can say, okay, this is how it's actually working. So regardless of what the accounting might say, this is actually the numbers there. The Bitcoin is appreciated to this amount. Whereas if you're a publicly traded company, you're more stuck with those types of public numbers, and it
Mm-hmm.
can mess up your earnings smoothness, your earnings quality, and
Mm-hmm.
things like that. And so,
Lyn believes that it's crucial to recognize that converting Bitcoin to fiat currency in order to make purchases exerts downward pressure on the value of Bitcoin. Fiat money empowers governments to exercise greater authoritarian control. The usability of both fiat money and cryptocurrency as currencies is dependent on the level of trust that consumers have in them. Lyn recently tweeted that some people want to trade digital pieces of paper based on weekly price charts. Others want to bet on what the world is likely to look like in 5 years. Unlike fiat currencies, which continue to inflate, Bitcoin has grown into an attractive store of value for those looking to preserve wealth from inflation-prone fiat currencies. Let's take a look into the video.
So in a short-term time frame, sometimes fiat cash does make a lot of sense. I mean, it was one of the best performing assets last year, for example. If most things are going down a lot, then something that goes down a little bit, is flat nominally and goes down a little bit in purchasing power, as a section of a portfolio can be useful, right? If you have a specific framework that tells you, most things are not going to do well, we're say economically slowing, all these things are happening, then, an outsized position to cash or cash equivalents can make sense.
Mm.
Obviously, longer term, the story is very different because cash is programmed to lose value over a multi-year period, year in and year out. And so basically, if you're doing that, you're kind of just making donations. You're paying tribute to seniorage. And it's obviously worse in some countries than others. Basically, whatever you're holding, you're in some way strengthening that monetary network and you're enabling that monetary network. And so, if you say disagree with the actions of a specific government, if you're holding their cash, you're helping them. Kind of like if you're holding shares of a company, you're helping them.
Bitcoiners are notorious for their overestimation of how quickly Bitcoin is going to take over the world and become widely adopted as money. If we take a long-term perspective, the outlook for Bitcoin brightens significantly. The case for Bitcoin global adoption is hard to deny. By focusing on these three cryptocurrencies, your portfolio gains exposure to more than 60% of the value in all of crypto due to Bitcoin and Ether's disproportionate share, while also providing exposure to up-and-coming trends that Polygon is pioneering, such as gaming, DeFi, and Web3.
I do think basically Bitcoin only has to be understood by the marginal that will then shift over, and then once it hits critical mass, it's just like, well, okay, this other thing's devaluing and this thing's not devaluing, and so it just kind of works itself out over time.
Mm.
On to the prior point, so I don't set out to trade. For Bitcoin, I dollar cost average in. I think that's how the majority of people should consider doing it. Basically,
Mm.
just determine what allocation makes sense to you,
Mm.
and just kind of stick with it and have like say a 5+ year view,
Mm.
preferably longer, but I know realistically like a 5-year thesis for what this kind of is playing out. Um, for portfolio management, because I provide a lot of investing research. I focus on this full time. And generally what I'll do is if something is becoming very euphoric or it's become a very oversized allocation in the portfolio, I will generally trim that. And so, when I have, say, securities that are proxies for Bitcoin, maybe they're Bitcoin mining stocks,
Mhm.
maybe they're MicroStrategy, maybe they're one of the ETFs or trusts that hold Bitcoin. If I'm doing that specifically in a portfolio context, and let's say I have 5% of the portfolio in them, and then they go up to 15% of the portfolio because they've gone exponential in
Mm.
like an 18-month period. What I've done in the past, like during this prior bull run, I said, okay, it's getting euphoric out there. Dogecoin's going vertical. This is tripled in terms of my asset allocation, so I am going to sell into the strength and basically, lock in the gains you've made,
Mhm.
because that allows us to then maybe redeploy when now we're like in a bear market. And
While
so
Bitcoin has had an impressive start to 2023, it is still down 63% from its all-time high of $69,044. Some economists, including Lyn Alden, believe that Bitcoin's current price surge may be relatively short-lived. The Bitcoin bull believes actions from the U.S. Federal Reserve will likely impose considerable danger ahead for Bitcoin in the second half of 2023 prior to next bull cycle. Our conversation for today has reached its conclusion. We welcome your opinions in the comment section below. If you found this content useful, please consider liking this video and subscribe to our channel. See you with another update.